SEC Commissioner Hester Pierce said, "Our country should always be one that is a great place for people to experiment. We are built on the notion that it's okay if things fail, because from that failure come lessons for how to build something new and better." And so while people may scoff at some of these initial experiments in crypto, those are going to be the roots, I think, of things that really end up transforming society in the long run. Folks, today we're going to talk about a really hot topic in the media and in our industry. We're going to talk about investing in cryptocurrency. And I have someone that I'm really impressed with. I have a great deal of respect for how he conducts his business. And he's not one of these crypto like cowboys, you know, he's really level-headed about it, and he's a great explainer. And so he's going to talk about what financial advisors need to know about advising clients in the crypto space. So folks, today I have Ryan Firth here with me. He is an hourly planner for, I think mostly crypto investments, but correct me if I'm wrong. Right? Did I mess that up or what?
No, that's fine. You're spot on. Anybody who's interested in crypto, come see me.
Right. Okay. So first, let's just talk a little bit about your business, because not only are you one of the only advisors in our industry that is really focused on crypto, but you're also an hourly planner, which I think is fabulous. I would love to see more hourly planners, but I know that there's so much resistance to it, I think. So tell me about that. Like, what's life like being an hourly planner?
Yeah, it really helps you to focus your time and attention on things that are going to drive revenue, right? So, you know, there's really not a whole lot of time spent doing extraneous things that aren't going to help bring in revenue to my firm. So it really helps you to focus, and time is, you know, one of those things that you can't buy more of. I suppose you could outsource some things so that you can free up your time, right? So that's usually why clients come to us as advisors, is because one, they may not have the knowledge, and then two, they may not want, you know, to do it themselves. So they want somebody to kind of help them. So yeah, it all just kind of, I think we all value our time. And so it just makes sense to me. That's the way most professional services work. Accountants, attorneys, that's how they charge, is by the hour. So why not financial advice?
Because financial advisors think they won't make as much money.
Yeah, I saw your poll on LinkedIn. That seemed to be the number one concern. Yep. And so, yeah, you may not make as much as you would if you were under an assets under management model, right? So that's an easy one, because it just brings in revenue every quarter. You know, you bill on assets. So perhaps that's true to some extent, but also I think from a compliance perspective, it's easier to do hourly planning. I don't manage assets, so I don't have as much to deal with on the compliance side. Right? There's less conflict of interest, inherent conflict of interest with hourly versus assets under management. There are just a lot of benefits to it. So yes, compensation is probably one of the things that deters most advisors from pursuing this model.
Yeah. Well, I think that, and I have seen some of them add the option to bill hourly to provide more pricing flexibility.
True. Yeah. So you do have AUM, you do that predominantly AUM focused, right? But then they also offer hourly. But, you know, probably most of their revenue is generated from AUM, I would say, than hourly. But there are folks, I mean, there are clients that come to me and they say, I don't want somebody to manage my assets. I just want to pay you for advice. So there aren't enough, I feel like there's a great demand out there, but there aren't enough, you know, advisors who are willing to kind of offer that as a service, this hourly model.
I think it could work especially well in a crypto kind of a situation too, which is what we're going to talk about today. So Ryan, let's just start with some basic definitions here. What is crypto?
You know, the way I view crypto, and everybody kind of has their own definition, but, you know, I think of Bitcoin, right? That's kind of the first original mass adopted cryptocurrency. There have been cryptocurrencies before Bitcoin, but this is the one. The white paper came out in 2008. They started mining in 2009. So it's been over a decade now that it's been in existence. And so the way it works is, and I don't want to get too technical because one, I'm not a technologist. I'm not I don't have a computer science degree. So this is not my area of expertise, but the way I understand
the hip hop version. Okay.
The hip hop. Okay. So high level, basically you have these blocks that are created, right? Hence the name blockchain. So blockchain technology is what cryptocurrencies are based on. All cryptocurrencies for the most part. There are some that are not blockchain based, but vast majority are blockchain based. So these blocks are linked, cryptographically linked through a hash to one another, and they build on each other, right? And they're this information that basically is created to, it's a distributed ledger, and it just creates block after block after block. And as part of mining these blocks or creating these blocks, there's an incentive mechanism, in this case Bitcoin, that is issued for each block that is generated. And with the Bitcoin protocol, a block is mined every 10 minutes. So what these miners are doing is they're going through these computations, and they're trying to figure out kind of what is the answer to this mathematical problem, a hash. They're hashing. And so basically the first one to, it's sort of a lottery system. The first miner to guess the right combination of letters and numbers wins the block reward. In this case, I believe it's 6.25 Bitcoin every 10 minutes. So these miners kind of keep the network secure. It would require a great deal of computing power to sort of attack the network in what we call like a 51% attack in order to kind of reverse engineer or kind of overtake the blockchain and kind of reverse the output from it. So yeah, it's very secure. We talk about immutability, so you can't really go back and change the blockchain. Once those records are recorded on the chain, they're kind of there forever. And so it just keeps moving forward. And yeah, so the other thing it solves is the issue of double spend. So how do you ensure that, when if I send an electronic unit of value to Mary, how do I ensure that, that I don't send that same thing to Bob over here? So there's the system, everybody kind of comes into agreement through this mining process that that I sent Mary one token, and that token is recorded on the ledger. And I can't also send Bob another token and pay for like two services with one token. So so it ensures that there's no double spending. So that's a bit of rambling, but there are a lot of interesting features to blockchain and cryptocurrencies, and those are some of the ones that kind of got me interested in it.
What's a DAO?
So this is a decentralized autonomous organization. These are becoming more popular. I actually have a client, she reached out and wanted help. She's working for a DAO. And so these are entities that are designed to, for a purpose, a specific purpose. It's a community of like-minded individuals who are coming together to, achieve whatever.
Hold on a second. Do you want to use like Steve Larson's Planner DAO as an example?
That's great. Yeah. So, right, exactly. So there's a Planner DAO. Encourage anyone watching or listening to check that out. So Steve Larson has established this DAO, a Planner DAO, and so there are advisors, financial planners. That's who it's geared towards. Can come and join the DAO. It's free to join, and you can help out and work on projects. So they've got a conference coming up in April 25th and 26th. So you can be a part of this organization, come meet the people behind it, but you receive tokens, and so they've got I'm not sure which token they're using, but basically you get a reward for contributing to the DAO. So whether it's educational materials or helping to build out materials for the organization.
Yeah. But let's talk about what defines the DAO. Like, is there a boss?
No, there's no, one head person. So in this case, yes, Steve Larson might have created the DAO, but the idea is shareholders in a company, right? So these token holders are sort of shareholders, and everybody kind of has a say in, there are proposals that are made. So If, let's say one of the members of Planner DAO wants to create an index of cryptocurrencies and, sort of build that product out, then, that proposal would be made, and whoever wants to participate in creating this index could, do so and would get rewarded in tokens. And sort of that's sort of the incentive. The idea is that the tokens would become valuable over time as more, individuals contribute to this DAO. So sort of a network effect, I guess, as it were. As more people join and are active in it, the more these tokens could potentially become worth something. So yeah, Steve would probably be the best person to have on because he's the one who created Planner DAO. So this is just me kind of spitballing and saying
okay, so say there's a financial advisor listening to this and they're like, oh, that sounds so cool. And so they go and like they join this Planner DAO, and then they contribute like 10 articles a week to the Planner DAO website, and they earn tokens. So then it comes time for the April conference, and they go to the conference. Does that mean they get like a free Diet Coke or something because of all the tokens they earned?
Well, so yeah, I guess you could hodl so hold on for dear life these tokens and hope that over time they become worth more than, I don't know what they're worth now. I don't know if you could buy a Coke with one of them right now, but yeah, so in theory, it does kind of change the incentive mechanism. So I think as part of this conference, they're going to give you 10 tokens to show up. And the exhibitors at the conference are going to give you tokens too. So I guess it's kind of a way to kind of get paid for attending a conference. I mean, I don't know of too many conferences that I know they give away free swag, but I don't know that they give away tokens and things that, could potentially be worth something down the road.
Water bottle. They'll give you a free water
bottle. Yeah.
Okay.
So, yeah, I mean, I don't know. It's all very kind of new. So, I don't know where this is headed, but I think one of the interesting use cases of a DAO was this Constitution DAO. I don't know if you heard about this one. So a group got together and they wanted to purchase a copy of the Constitution. Yeah, apparently there was like a version that was found or up for auction. And so these individuals got together and they put in their, I don't know if it was, I guess it's probably Ether, which is the second largest cryptocurrency. They put in Ether, tried to, get several $1 million worth, I guess, to purchase this copy of the Constitution. But I guess one of the hedge fund managers out of Chicago came in and swooped in at the last minute and outbid them. So now they're kind of like, well, what do we do with this Ether? Do we return it back to the DAO members, or do we change the purpose of the DAO? Yeah, that one was interesting. So there are all sorts of DAOs.
Right. So let's say that you're a financial advisor that isn't into all this stuff, like that isn't into DAO and isn't into crypto. I mean, how widespread is this stuff? I mean, I saw that one of my charities that I donate to is the International Rescue Committee. And I think I saw that you could donate to them in cryptocurrency. But so far, I haven't been able to Antonio the other day told me that you could shop at Walmart in cryptocurrency. But is this something that it's important for advisors to know about? Or is it just kind of this Star Wars stuff that they can kind of if they don't want to be in Planner DAO, or if they don't want to work with cryptocurrency clients, do you think they could just ignore it forever? What's your stance?
Yeah, I mean, not everybody's an early adopter. Not everybody is tech savvy. So certainly, most advisors would probably not advise their clients to get into a cryptocurrency. So yeah, I mean, I think everybody's going to kind of have their thing that they gravitate towards. And so some people just drink the Kool-Aid or are really into crypto, and that's fine. And you're going to find that there are clients who come to you and seek advice, and they might have crypto holdings. So I think advisors should at least understand what's going on. They don't necessarily have to agree with their client's position or, invest in it themselves. But I think it would behoove most advisors to kind of at least keep up to date with what's happening, because it really, this space changes quite a bit. We've seen Facebook changing to Meta. We're talking about the metaverse, and so there's thoughts of, okay, well, cryptocurrencies are going to play a role in that. this Web 3.0 concept of, everything kind of being augmented reality, virtual reality kind of ties in with this metaverse theme. So, and then we haven't even talked about non-fungible tokens. So this is sort of the next, this has really exploded in the past, year and a half or 2 years. So you've got these tokens that are issued that kind of basically you've got like Banksy, who's this artist who, kind of has this unique art that is recorded on the blockchain. And so you have the tokenization of assets. So in theory, you can have real estate, right? Instead of having a deed and recording that deed in the process that we currently do, it's recorded on a blockchain. And so I think that we're going to see further kind of movement towards this, this new way of transacting and recording all on a blockchain, which can be highly secure.
And you mentioned the term Web 3.0.
It's a very broad term, yes. Yeah. So in my mind, it's so I guess Web 1.0 would have been, early 90s, kind of the .com boom. Then Web 2.0 is kind of where we are now with, we've got Zoom meetings, we've got, a lot of our lives are transacted online. I think Web 3.0, the thought behind it is kind of, this is moving more so to, communicating via the internet and, having our digital identities kind of kept there, avatars, I kind of think of it like Second Life or, some of these role-playing games, I guess. So I'm not saying it's for everybody, but, this is kind of where things are sort of headed, I think, with augmented reality, VR, virtual reality. Our more and more of our lives are probably moving towards being online, for good or bad, because I think it's good to be unplugged. I don't know that I want to, become have my whole identity online and spend all my time in front of a computer. I think I spend too much of it already as it is. So.
Yeah, or what kind of freaks me out is the idea of the blockchain and the idea of every transaction that I do being tracked. Like, it's not like I do anything weird. Like, I have 4 kids and I do my business and I go to the grocery store and I go to school and pick them up and stuff like that. Like, that's my life. Okay. Like, I don't do anything fun anymore, really. But like, what if I want to go buy something and I don't want the government knowing that I bought that at that particular day? Like, it's too kind of invasive, it seems like. So bad. But I thought Web 3.0 was interesting because it's the idea, I think, of decentralization and tokenization of the internet, which hasn't quite unfolded. I feel like we're definitely in the very early innings.
Early stages, for sure. Yes.
Yeah. I'm going to be doing another podcast about this, but I just had an experience with Coinbase that was like, whoa, how fast can I run in the other direction? I don't know if do you use Coinbase? Can I ask you that, or is that too okay? Wowsy bowsy. What happened was I thought that I should have some cryptocurrency. Not that I was going to speculate or make me $1 million. I was like, I thought of it almost like a hedge, not like an inflation hedge, which people think Bitcoin's an inflation hedge, and who knows what that is. I just was like, if something happens to the US banking system, because the idea of decentralization is interesting to me, right? Because I'm like, I have kids, what if the banks get shut down by robots or something, these crazy things. I think right now I'm like, I want to have some cryptocurrency so that I can just even $500 so we could survive for a day or something, right? And so I went and I opened up a Coinbase account, and I felt like I think I was expecting it to be like a traditional bank, where when you go to invest at your Ameritrade or whatever, or Schwab, and you're there are robust controls. Okay, where it's like you do the transaction and then you get a confirmation and this, that, and it was not like that at all. Like I almost felt like I was ordering like tofu on like by being on this app. It was too much of a like I felt Silicon Valley experience. I clicked. So I'm like, okay, I'm just gonna put in $250, right? So I clicked once. And I think what happened was I clicked too soon after setting up the account, because I get this message like this did not go through. So I'm like, oh, okay. So I wait like 2 minutes and then I attempt it again. So the second one goes through. So my 250 goes in there. But then guess what happens? A minute later, I get another message and Coinbase tells me your first transaction went through also.
See about $500 worth of crypto.
Yeah, and I'm like, whoa, like slow down here. I wanted 250. Like I did not want this. You told me the transaction didn't go through, and so I was just like, how, like what, you told me it didn't go through, but now you like revived it somehow. Like was that like a just kidding? It should have been like this didn't go through. But hold on a minute, like they should have did something, like give me an emoji, give me something, right? And so I go on the chat and I'm like, what the F happened here? And like, it was one of those robot chats where I just started like, here's how to direct deposit from your bank account. And I was like, oh, hell no. So then I'm like emailing support. Anyways, they froze my account for 2 weeks. On top of it all, right? So long story short, I'm not sure everybody has this experience with Coinbase, but one thing I am sure about is that I am not right for this whole thing. Okay. But I kind of wish that I were, but I'm also, I don't know, I'm going to do another podcast about this, but my like takeaway from that whole experience was, I don't know if the world is ready yet for a DeFi. Like I don't know if DeFi is ready for the world or vice versa. Right? Like I think there's too many glitches, and for somebody who's traditional when it comes to money, like a lot, you see me with like the purple hair, you know, like all the crazy things I say and do, but when it comes to my money, I do not play. Like I do not like confusion. I do not like I do not like lack of clarity. And that is what that whole thing was for me. And I was like, if I'm like this, like, I can't imagine how many other people this happens to. Like, how does an advisor do this? How does an advisor invest in crypto for their clients? Or do they even do it? Does the client do it themselves? Like, how does that typically work?
Well, it depends on the advisor and how they're set up. Again, going back to the kind of, are they asset focused? Do they charge on assets? If they do, it's probably a little bit more difficult to manage a client's portfolio if they have crypto assets, because they'll probably have it in a retail account like a Coinbase. And so
yes,
so
let's say the client has it in Coinbase, right?
Yeah, so that's kind of a held away asset, right? So there's no way for the advisor to really, unless you're doing a fixed fee. So really this is kind of where hourly or sort of a fixed fee or subscription model might come in, be more effective for working with clients who have these sort of held away assets like that. But there are solutions that are coming about that allow advisors to get their clients exposure and be able to manage those assets for them. There are separately managed accounts that can invest in crypto assets. BitRIA was recently purchased by Gemini Exchange, the Winklevoss twins exchange of Facebook fame. So there are solutions that are coming online that do allow advisors to, like I said, get their clients exposure. So one of the issues though that advisors are running upon is will their insurance pay for sort of the, I guess, professional liability insurance pay for, they put their client 5% of their client's net worth in Bitcoin, let's say. As we know, Bitcoin can be highly volatile. It's, was up to almost 70,000 in November. Now it's down in the 30s, high 30s now. So that's about a 50% drop in the course of 3 months. I don't think a lot of clients are going to be too happy if they see their they see that balance go from $100 down to $50. They're probably not going to be too happy about that. So if they're not prepared for that volatility, they're going to point their finger at the advisor. And so then the advisor could be on the hook that client comes after them, wants to sue them. Well, will their insurance cover that lawsuit, or will they have to pay out of pocket? So I think that there are those, that's just one example of kind of what's preventing, I think, advisors from moving forward and allocating crypto to their clients in their clients' portfolio.
My cyber insurance does not cover theft from crypto.
Mm-hmm.
Like if someone were to rip me off in my bank account, it would, but it doesn't cover it if I'm trading crypto. So
yeah,
that's what I mean. That's my whole comment about, like, I don't know if it's ready yet, kind of a thing.
Mm-hmm. Yeah.
But so generally, what are the tax implications? Is it because I saw something on LinkedIn that you posted? Tell me about it.
Again, how much time do we have? So
The basics. So it's
treated as property.
Yeah. My accountant emailed me and he was like this whole one of those like accountant letters where they're like, certify this by this time. And I'm like, what the hell? Like, just, is this like from the IRS? Like, what is it? And he's like, no, like, I just need to know if you've been investing in crypto. Like, I need to know before I do your tax return or something like that. Anyways, okay. So just in a nutshell, like, are these currencies? Are these assets?
Yeah, so the IRS calls them virtual currency, but they're not taxed as currency, right? So they're taxed sort of like stocks or bonds. So it depends on your holding period. If you hold it for over a year, you get, preferential capital gains treatment, long-term capital gains rates, could be 0%, 15%, 20%, depending on, how much money you make. And then there's a net investment income tax on top of that, 3.8%. So, you could be looking at about 23.8% tax on that. Then there's also the
you're making my blood pressure go up, Ryan.
Sorry. So basically, if you hold it for a short-term period of time, let's say you're buying, you're selling, you're doing it within a year, you're trading like stocks, right? You're doing sort of day trading, then you're going to be subject to sort of short-term rates. So, that's going to be at your highest marginal tax rate, typically. So it's treated as property. Short answer is treated as property by the IRS. It depends on how you hold it. If you hold it as a capital asset, like an investment, then you're going to, be subject to those, short-term, long-term capital gains rate. If you're treating it like personal property, then I think that then it's a whole different ball game. Then it's not going to be viewed as a capital asset, and so the taxes get a little more tricky. So if you're using your crypto to go buy coffee, in my mind, that's you're using it as a personal use property, and so you don't. So if you have gain on that, let's say you bought the token for $100, it's now worth $200. You really like coffee, you buy $200 worth of coffee. You're going to owe $100 of that gain, that between what you paid for it versus what it's worth when you buy that cup of coffee. That's going to be taxed at as a short term. It's going to be taxed as like basically short term capital gain, because it's personal use property. It's not, even though you might have held it for over a year, it doesn't receive that capital gains treatment, that long term capital gains treatment, because it's not a capital asset. You're using it as personal property. So yeah, it can get pretty tricky. And then there's also the issue of if you're using it as a collectible, so NFTs, non-fungible tokens.
Do you have a baby?
You got a 2-year-old who's acts like a baby still, because he's a toddler.
That's a baby. I have almost 3-year-old. We still call her the baby.
He is a baby. Yes. We got 2 here at home. One's at school. So apologies for the ambient noise.
Oh no, are you kidding me? I mean, I've recorded podcasts with the zoo in the background. I think it's fabulous.
Sometimes it feels like a zoo here at home, but yeah, it's just the kid.
You miss my kids. Okay. Now, just to wrap up here, Ryan, how does somebody know if they're an advisor and they're like, I want to be like cool, right? Like I want to be a crypto, like I want to be crypto friendly in my practice. What should that person do? Like, what are 3 steps that that person should consider taking?
Well, one, I think you have to kind of, in order to practice what you preach, I think you need to kind of explore and, like you did, go on Coinbase or whatever, they're cracking Gemini.
They're for long, Ryan, but yes.
Well, I mean, you have to at least dip your toe in and try. You don't have to invest $1,000. It can just be a nominal amount. See what it's like, explore. So you can at least, when a client comes to you, you can say, well, I've tried it. This was my experience, or, have an opinion about, is Bitcoin an inflation hedge? Is it insurance policy in case the government goes to hell in a handbasket and we've got, runaway money printing, which, could also, I guess, be that inflation hedge, like you said. But yeah, so what's your, what's your own personal view on it? Because the clients are going to come to you and want to know that. And if you,
I think if you're going to do it for clients, I think you should be doing it for yourself. 100%.
I think so. Yeah, I think you got to play around and just see what it's about. Even I've never even, they say if you don't control your private keys, then you don't really own the asset. So I've never even gone as far as like taking the private key off of the exchange and putting on a hardware wallet. So those are things that that's like next level that you should probably if you really want to get into this and help your clients kind of think through those things, because like you said, the government could shut this down. There's that possibility. We've seen it in China. The U.S. government could see this as a threat. That they're coming out with the central bank digital currencies. So if clients want to have possession of their crypto, they technically need to take that private key seed phrase, something, take it off the exchange and have it, in a either paper wallet or in a hardware wallet. So I would advise clients to
what about education? There's one company that does like education about this that I don't particularly like the people. So I don't know if you say the name, I'll kind of like just delete it out of the podcast, but there's
well, I know there are some different various organizations, and Rick Edelman, I think, is a big proponent of, he's got his own certification program.
Rick Edelman certification program. But if you're not an Edelman advisor, can you still do it?
Yeah, no, it's not. He's kind of disassociated from, and I forget the name. It used to be called READAC. I don't know what it's, I think now it's some sort of digital asset program. Anyway, so there are some certifications. Adam Blumberg has a certified digital asset advisor that is actually part of Planner DAO. He's contributed that to Planner DAO. And so if you sign up on Planner DAO, if there are advisors who want to do that, you can take this certified digital asset advisor program. I'm currently in the middle of it, and it's really good.
I saw that on Planner DAO, actually.
Yeah. Again, I haven't been through the whole program, but so far, Adam's been great. We've got weekly meetings to kind of discuss the lessons that he's recorded, and that's a good one. And then the AICPA.
Maybe I should join Planner DAO. Maybe that's what I should do.
You should. Yeah. The more the merrier.
Okay.
I think people are throwing out all kinds of ideas because they're sort of in their own client interactions. You can post things and people can respond, or it's good. It's a lively community, so it's worth it. You don't have to contribute. You can just kind of be a lurker and kind of see what it's about. And if you don't like it,
non-advisor or non-financial planners on there.
There are, yeah. So there are, those who have products that they're, working on that are kind of focused for advisors who want to advise clients on cryptocurrencies. You don't have to be an advisor to be on this Planner DAO.
Like if financial advisors listen to this, if they have a client that wants to invest in crypto, but they can't do it, can they send them to you, Ryan?
I'm happy to work with advisors. If a client is a good fit, I'm happy to, take the referral, see if I can work with them. My philosophy isn't necessarily if a client comes to me and they're like, if they're interested in cryptocurrency, I'm not going to broach the subject with them to begin with and say, oh, you definitely should put 5% of your, investable assets in a crypto. No, typically it's just, comes naturally of conversation, or they find me because I sort of, I wouldn't say that I know everything, but I'm knowledgeable about crypto, so I'm happy to have conversations with clients about it. Wherever they're at, if they're curious, happy to kind of educate them and kind of tell them the potential pitfalls and go through my experience in investing. And the taxes. It's always about taxes and estate planning in my mind. Those are two important things that clients don't necessarily think through. So,
You're CPA.
I'm a CPA, so yeah. The taxes are, everything comes through a tax lens for me.
Yeah. See, and this is why I like this approach, because it's grounded in fact, reasoning, and logic, rather than the way I see some people approaching it. Which
you can find me on LinkedIn, Ryan Firth. That's where I'm most active. I'm also on Twitter, Ryan R. Firth. Those are probably the two easiest ways to get a hold of me.
Okay, everybody, that's it for now. We will see you in the next one. Please subscribe, rate, and review this show. Just need to record a very quick disclaimer here. Grillo Investment Management, LLC, does not guarantee any specific level of performance. The success of any strategy that Grillo Investment Management, LLC may use or mention in any of its content, or the success of any program it may mention in any of its content. Grillo Investment Management, LLC will strive to maintain current information. However, it may become out of date. Grillo Investment Management, LLC is under no obligation to advise users of subsequent changes to statements or information contained herein. This information is general in nature. For specific advice applicable to your current situation, please contact a consultant or advisor. I want to be clear that nothing in this podcast can be interpreted as an investment recommendation of any type. I have no financial affiliation with Coinbase or any other company mentioned in this podcast or blog. Do your own research before investing, and do not interpret anything in this blog or podcast to be a recommendation specific to you, your situation, or any clients of yours. Also, nothing in this blog or podcast can be interpreted as legal or compliance advice. For advice on such matters, contact a legal or compliance advisor.